So you want to be the first to know
what's happening with home prices here in the Denver metro area.
Well, we're going to cover that and the dramatic change that happened just last month that's helping a lot of people with the decision of when should I buy, sell, or invest. And what I really mean by when is once you know why you're going to buy, sell, or invest in real estate, the next question really comes down to, should I wait or should I take advantage of the current market? And what we mean by that is knowing the reality of the current market, but then the opportunity of waiting, opportunity cost, right? And or the opportunity in any given market, which is usually a time period of exactly what's happening today to what we could predict is going to happen over the next 60 to 90 days, which we'll share with you on this month's market update. Now, remember, we saw some dramatic changes throughout this year. We saw inventory rise from 2 months all the way up to about 4 or a little bit more months of inventory, meaning doubling months of inventory. Why do we use that term? Well, because that term is what's most important. Months of inventory is really a understanding of supply and demand and the main predictor on what's going to happen with home prices year over year. If it's below 4 months of inventory, remember, there's a high probability that home prices will continue to rise. And as it starts to decrease, we're in more of a favorability of the rate at which those home prices will continue to rise. And this year was favorable for home prices not rising at a dramatic rate like we've seen over the last several years. Now, why is that though? Well, it's easy. When we talk about reality, we could ask the question, how many of you would like for home prices to remain low while interest rates get lower? And the challenge is that that's not a reality. The reality is when interest rates drop, home prices rise. And it happens every single time we come out of a recession. It also happens every time that we are in a low inventory crisis, meaning not enough homes on the market for the demand for which people have on single family homes. Now, we could also ask the question of
how many of us like to take our time in making a decision to purchase a home while having more and more available homes to actually go see to choose from.
The reality is that's not the case many times in a low inventory market. And you can see we're talking a lot about inventory right now because that's what happened just last month.
We saw a dramatic drop in the months of inventory,
which was an indicator to where we can start next year. And the challenge of waiting is what happens next year with those interest rates and the demand, which there are some good signs to be able to predict. But again,
nobody really knows because each and every one of us makes the decision on whether we're going to wait or purchase today.
But a lot of times it's based off having the right information, which is why we're excited to bring this to you each and every month. So if you remember, going from October to November, the overall demand pending home sales were up month over month. They were up year over year. And remember,
pending sales is just the overall demand for which people are purchasing, selling, investing in real estate.
So we actually saw more people transact in October than we saw over the last 4 years in real estate, which is very interesting, right? As we look at the month supply of listing though, you can see we were at 3.4 months down from 3.6. It wasn't necessarily a dramatic drop, but we started to see inventory drop sooner than we've seen any time over the last 5 years from a seasonality, meaning we started to see inventory declining all the way back in June. Now, if we start looking at the overall supply, not necessarily demand, the active listings that were on the market was 11,700, which was 6% less than the prior month and only 10% more than this time last year. Now, why we bring that up, remember, is
the reason why home prices didn't grow at a strong rate this year is due to the fact that we had a lot of active listings sit all the way since about April at the beginning of this year.
As well as those new listings came to the market, we didn't have enough transactions take place due to the fact that interest rates rose a little bit, they stayed flat, and there wasn't a lot of favorability for people to be in the market. However, for the stories of all those people that did transact, which was a large amount, the type of home, the terms, and the negotiations were extremely beneficial to many of these buyers who decided not to wait. And when you look at potential outcomes next year, they're going to be in a really good position to just refinance to a lower mortgage rate, but not necessarily have to compete with the potential potential challenges of a
low inventory, high demand market,
which is not where we were this year from about April all the way until this month. The reason why we bring a lot of this up is because as you start looking at overall supply and demand, the supply going into November and then through December, you can see active listings was 9,822. That was 20% less than the prior month. We lost 20% of the active available listings. So there's not a lot of homes just sitting on the market, while at the same time, new listings dropped 41% month over month. Now, this, just so you know, is normal though. November, December is the slowest time to see new listings come on the market, but when you start looking at what that led to, due to overall demand, pending sales, as you can see, were up 2% from prior year. So again, we had more people contracting this time this year than we've really seen over the last 3 years. And what's really interesting about that is it caused our months of inventory to drop from 3.5 to 2.9. So what does this mean? Well, at 2.9 months of inventory, as you see, we still have another 2 months of winter season to see where that inventory ends based on the dramatic change in new listings that we saw month over month. If that occurs again, and we see these listings on the market right now go under contract and active listings not build, what you're going to find out is
we could end up somewhere below 2.5 months of inventory
coming into the market next year. Now, why do I slow down and share that? Is because the challenge or the fear, remember, fear is just false expectation appearing real. It's not real yet. Is if many people are waiting to be in the market and interest rates do drop and a lot of these people come to the market, if our new listing inventory cannot climb at the rate that it did this year,
next year's market could be that of a low inventory, high demand market.
That requires different strategies, which we talk about in our strategy calls. So if you're thinking about buying, selling, or investing, the question of should I wait is really based off of more information needed to just answer. But I'll tell you right now, seeing inventory go from 3.5 months to 2.9 in a single month is an indicator
that we are going to continue to see home prices rise, while dependent on what happens with demand,
we could see that number continue to decrease. And if interest rates continue to drop going into next year,
it can be more competitive.
Remember, that doesn't mean you don't want to be in the market. It just means you need to know the reality of what it's going to take to compete in next year's market, which might be why it makes sense for some people to get into the market today, where there are still more favorable conditions for buyers to negotiate the terms that they want
and have sellers buy down the rate they desire instead of waiting.
So, as always, we love keeping you current. We know that it matters most when it comes to the decisions of buying, selling, or investing in real estate. This month's first to know really is for you to know that if there's no reason to wait, go out and take advantage of the current market conditions, because there's better deals today if tomorrow is a lower inventory market. Now, here's the part that I didn't talk about, though, is that
if the supply and demand remains balanced next year, we could see a really good year of real estate
where there's just not a lot of change, not too competitive, but not a lot of deals like we saw this year, which could be a fantastic time for many people to finally hear something called neutral or constant or consistent, as opposed to, again, low or high, which is what we've been dealing with the last couple years.